Good morning, traders. How are you? This is Ben with Vessel Futures Trading. We're back in the market as promised, trying to even broadcast from YouTube in order for you guys not to miss the morning shooting right before we're going to jump in. Again, I want to say a major thank you to the traders in the Discord channel. Of course, it's always a pleasure to so welcome to all the new traders. Hope that you bring and find value to in our community. Those of you who did not still join the server is completely for free. There's a free knowledge and a free call it a wide range of traders that sharing their knowledge and their positions for you to guys educate yourself and see how the group operates. It's always better and nicer to trade with the group, with a community. So it's there for you for the taking. Those of you who chose to expand the membership in the last few weeks and be exposed to the trading alerts, I hope you find it valuable and you're doing well. And of course, I'm going to see you in the Discord. Let's jump into the market. Just before the market starts, we still trade in the night profile. And as always, we're always going to shoot first for the, we're going to look for the bird's eye view. Today, we arrange the screens in a little bit more, call it a visible way. On the right side, we see the day interval. Right next to it on the left is the 4 hours interval, the 15 minutes and the 1 minute to follow. The reason that we're looking at this, we always want to look for synchronization between all the intervals, and this is very important. Of course, taking the events that happens last week, the Thanksgiving weekend, and of course the market surge. Of course, we expect the market to continue to rise, of course, and we're going to dive in and see what is it for us to gain today. Those of you who swing trading, we're going to start with the day interval. So what we saw, of course, in this interval, we saw how NASDAQ literally shoots up, get to a specific point that it started to decline and sits on the demand. I'm looking on the right side of my screen, sits on a minor demand over here and shooting back up. And that's what happened yesterday. Of course, you see the market keep on climbing, trying to reach this supply area on the top. I'm going to zoom in on this profile on my right and basically trying to understand where I'm holding today. So, of course, we're looking to, at least at this point of day, to trade this area right here. I'm going to mark it right here, maybe in a more visible line. We basically see how the market raising up and going landing back on a minor demand, trying to shoot up again. And what we're looking for is to trade this area where the price is located right now. Let me just mark this arrow with the white so it's going to be more visible to you guys. Just in a space of a second. So just the line is, now it's a little bit more visible. We can see on our right side that we're looking to trade this area right here. This arrow basically shooting up. While we're looking to do this, we know that the price is going to try to test this area right here. This supply area, we already saw this candle basically breaks the former demand. Basically, sits on this demand, and we see that already passed this week of this candle, and we know the market is potentially to rise up. It already did its correction, so we're looking to trade it all the way up. See what's going on in this area, in the supply area, where it's going to break it, is continue with the momentum upwards, or it's going to land back downwards. So we're now going to move to the 4 hours interval. I'm looking on the second on the left side of my screen, which is parallel to the day interval. Of course, within the 4 hours interval, we're going to mark the supply and demand areas that we have. So we have the minor supply over here and additional minor supply where the price sits right here. And we know that when those are two attached together, we know that the potential for the price to rising up to the closest supply or the highest supply is relatively fairly. Of course, it's a high possibility. Of course, we have to always think about the trading as a game of probabilities and statistics. And we see what happened in this point right here. How the price basically did not support a short position yet. We see that we have right here a struggle candle, a doji, and another candle that did not confirm that it passed the head of the doji with no supportive volume means that the sellers could not take the market down, and therefore the buyers are still in the pictures looking to achieve this momentum right here, go upwards. And what we want to see is basically to get price break in this area, line backs on the whatever was supplied previously, and take a long position from here. So we mark the supplies and demand, and we know where we are at right now. We know that the price will try to achieve in high likability to this point, and this is how it looks on the 4 hours interval. Now we're going to dive into the 50 minutes interval and see where the opportunity resides. So obviously, we see over here the night profile in blue color right here. And we see the day interval, the previous day interval. We saw a beautiful D shape yesterday, was relatively easy day to trade. And we see the night profile build up as a small P shape, means that we have a short dip on the top. It means that the price can fairly relatively go upwards and expand upwards. What we want to see is basically another possible position would be right here to take a long position from the where the price is located right now. We're on the POC. Basically, what we want to see is the price is reached from a high value area to the demand, which is corresponding to the low value area of the night profile. Went back to the high value area, landed back on the demand, which correspond to the high value area, and now reaches for the third time. It means that the sellers can